Hey everyone, it's Daniel here from InfoRest. Hope you're all doing well. The topic for today is, has inflation peaked, right? In the past, since the past couple of months, a lot of people said that inflation would hit 5% this year, at the end of this year, 4%, and so on. A lot of people were saying previously, a couple months back, that inflation has peaked, inflation has peaked. But let's bring this question back in again. Has inflation peaked? Are we now, or are we going to see inflation peak very, very soon? And what would be the reasons for that? Now, the last CPI report, the US CPI report that came out, the number came in lower than expected, caused stocks and bonds to both rally, to go higher. Now, you could argue there are certain factors that may suggest that, okay, we probably may see the next CPI report, which is coming up in December, may be weaker or in line. But definitely for next year in 2023, we probably might see lower inflation. And why is that? Well, if you look at the shipping container prices that are out there, they are at low levels right now. So that's contributing to low inflation, which might signal to you that supply chain issues are starting to ease or have eased, right? On top of that, we're having, and we've heard Walmart and Loblaws and a lot of other retailers go to suppliers and say, hey, lower your prices. You need to lower prices, and discuss with the suppliers that, we need lower prices going forward, and we can't be dealing with these higher prices. Although it may feel like, and I do totally agree with you, and I do see it, that when you go in the grocery stores, still seems to be some sort of supply chain issue still there with certain goods, like for example medicines or certain food items. If you do look at food, it's still quite elevated, whether you go to restaurants or the grocery stores. So we haven't finished or fought the battle completely, and we haven't won the battle, is what I meant to say. We haven't won the battle completely with inflation, because it's just the beginning. It's just the beginning. But are these the signs? And what is the real sign that is telling us, or that could tell us, that next year we're going to see, inflation really crunch and come down? And the sign that I would look at is growth data. And I've been saying this over and over and over and over and over and over and over again, even in the previous videos, that in order to bring inflation, you need that recession. You need that recession. You need that contraction in growth. Well, what did we get today? We got manufacturing data. Manufacturing PMI came in lower than expected, came in below 50, which signals contractionary, recessionary vibes, recessionary signals in the economy, that the manufacturing industry is shrinking and the demand side is shrinking. It's doing worse off. Whenever you get below that 50 level, it signals contractionary recession in the markets, in the economy, right? So the fact that we got that number today, and the fact that we got more growth data coming out in December, non-farm payrolls, ISM manufacturing, CPI data, jobs data, and whatnot. We did also see somewhat of the jolts and jobs number come in slightly higher as well, right? Which is, again, another sign that unemployment rate is increasing, but we haven't seen the full effect of all these layoffs that we're hearing. HP and Meta and all these tech firms. We have yet to see it really push up the unemployment rate higher, which, has a lagging effect, and we might see later. But if you just connect everything together, today's data, the prices and the shipping containers, and also if you look at energy, I understand it's still elevated, but it's lower and has been lower since the 130 mark on WTI, and it's trading around the $70 level and onwards. If you look at where growth will be in the next coming months, it doesn't look like growth is going to be better off, especially next year. Especially if I were to put a timing on this, March of next year, between March to April, May of next year, I don't think growth is going to be where it is today, and I think it's going to be worse off, and you're going to see the effects of all the 2022 tightening that we've been doing. we're going to see in 2023. So that's why I did a video saying that the stock market is in a rude awakening, because it's going up on low data, and pivot is coming and here and there. But let's not forget that the stock market did sell off in 2008 and in 2001 when the Fed started to cut rates, interest rates. And you would think, okay, interest rates that are out there, if they start slashing, then buy stocks, buy stocks, buy stocks. Well, previously, if you look at previous recessions, when those interest rate cuts came, the stock market still sold off. Still sold off in 2008, still sold off in 2001. And I think we might get the same situation here in 2023. We're sure there might be a short-term rally in the markets, followed by a recession, which is priced in. But the severe recession that some data, some economic indicators are talking about, that are signaling, that the market may not be signaling, that severe recession, I think that's what's going to throw the markets off guard, and that's what is not priced in, which is why then, sure, if you see a rally, it'll probably reverse back and we'll see a massive sell-off. And due to that, due to the data, you could now say that, sure, CPI, worsening conditions in the capital markets, the fact that you could see bonds rally and have the yields come off, right? Which would be somewhat easing, which would feed into that inflation again. But to offset those yields from coming off, the data that comes in really weak, the unemployment rate that goes skyrocketing high, all this economic indicators that are flashing red hot signals, and the manufacturing data. It'll be very interesting to see ISM manufacturing data come out in December, how that comes out to be. If it comes below 50, very, very telling sign that we're headed to this growth demand destruction, which would lead to inflation coming down. And I've been saying this for a very long time, that you need to see that recession for the inflation to come down. And I think these are your early signals, your early signs that, yes, looks like inflation is coming down, or is expected to come down, likely to come down next year, if growth continues to shrink, and if it continues to show, the numbers getting weaker and weaker and weaker, I see why not inflation to come down. So has inflation peaked? Sure. Let's not get ahead of ourselves, but let's wait till December's data. But you can start to put a argument together that, yeah, it looks like it is starting to peak. Just give us one or two more data points to confirm that. Let's continue to monitor the growth data. Continue to see how the Fed continues to increase interest rates. If they continue at this pace, definitely. We start moving up to 5.5, maybe to 6%. We don't know where exactly it will end for 2023. Although the markets and the bond market's pricing in a pause for a very long time once we hit close to that 5% level. But let's see. But no matter where we're going, all the tightening we did in 2022 has to, I'll be surprised if it doesn't, but has to, in my opinion, my humble opinion, to have an effect on the data and, most importantly, inflation, and eventually it should come off, even though we may not see it in the groceries that we buy and the food that we buy, and when we go to the restaurants and whatnot. We still may be feeling pinched there, maybe in rent and shelter and so on, but this demand crunch eventually should seep into the economy and should bring this inflation level lower. Now, I talked about stocks selling off when rates are cutting, and you'll probably see maybe a short-term rally and then a sell-off. But what does that mean for bonds? I prefer bonds in this kind of situation, where we could see bonds being the better trade, the best trade, if equities end up not really selling off as I'm talking about, right? As expected. It may not sell off that hard. It may rally and then sell off to maybe the previous low of this year, right? We could see 2023 where we go up and then the rude awakening, and it's not as bad as what people were anticipating. I don't know. The stock market is its own mind. No one can predict the tops and the bottoms, but I can definitely say bonds, because they had a pretty bad year this year, they look like a pretty good bet, in my opinion, for 2023 and onwards. This is not financial advice. I'm just letting you know what I think and what I'm doing personally, but that's where I see the opportunities in the markets, and time will tell if I'm right or wrong. Again, this is not financial advice. Please go get a registered financial advisor before making any decisions, and to help you with your portfolio. But definitely, when I look at the economics, when I look at this data, to me, there are now telling signs that we gotta see that growth crunch, gotta see that demand crunch, which would crunch and crush inflation. Let me know what you guys think. Leave a comment below. Subscribe. Hit the like button as well, and the bell icon to be notified on the next video. And I'll see you around. Cheers. Bye.